Okay, today we have one of the foremost experts in the world on precious metals investing, specifically on silver. He's AKA the silver guru, and his name's David Morgan. He's also the host of the Morgan Report, which is where I first learned pretty much everything about precious metals investing, mining stocks. It's an amazing course and newsletter that he has available. So you'll see the link right there down below. We get the opportunity to talk to one of the most successful mining investors in the world. So thanks for joining, David.
Jake, well, I live up to that intro, but yeah, great to be with you. It's nice and cold here, winter time in Spokane, Washington, and I see you're smiling with a lot of sunshine behind you, but thank you for the interview. It's good to be back with you.
Now I got my winter stuff on too. All right, so right now has been, obviously, no one could have predicted how weird everything would have played out this year. And I guess my first question is specifically to the metals, to gold and silver, is we had that big run up past 2000 in gold, silver almost up to $30. And not only has the price kind of deflated a little bit, but I feel, judging by the comments and judging by social media, the sentiment has also deflated. And, there's so many people that are so swayed by the volatility, and now people are wondering, is this it? Are we not even going to get $2,000 gold? Are we going to ever get silver going up? So what's your overall take on where we're at right now? Has it changed at all your views? And let's hear it from the silver guru.
Okay. Well, first of all, let me start with gold. You did ask silver, but gold is a little easier to quantify than silver. It's a bigger market, broader market, more of an establishment market. The banks still are net buyers of gold from 2011 onward. So there's a little more data and, again, a broader market. So gold is performing almost exactly as I would expect under the current conditions. I mean, you get these pretty big moves up, and then it levels off for a while, then it sells off, consolidates, and then it's ready to move up again. So gold actually established its bottom on this secular market in December 2015. And it's been up and down and up and down and up and down, but all the lows have been higher lows. And a higher low technically means it's in an uptrend. So if you just drew a line from each of the lows from 2015 to present day, it would be sloping from the lower left to the upper right. So you've got an uptrend. Silver dropped into a low the same time frame, December 2015, and I at that time thought that was a low for silver, and I was wrong. We actually hit the low in March, hit that gold silver ratio of around 125 to 1. But since that point, as you already pointed out, silver already touched around the $30 level this year. And silver being a smaller market, not as well followed, and a different dynamic. It's got two dynamics. It's got an offtake that never ceases based on industrial demand. It may ebb and flow, it may go up and down, but like the gold chart I just mentioned, the overall trend for silver on an industrial basis is up. If you look 20 years ago, 2 decades ago, the offtake of silver for industrial use only was 35% of the total market.
Wow.
And that was when we were only mining 550 million ounces. Today, as of 2019, the offtake, according to the World Silver Survey, was 60% of the market.
Oh, wow.
And we're mining 850 million ounces.
Oh, wow.
So do the math. We really have increased the industrial demand for silver over the last 2 decades. It is falling off this year because of everything that's going on. I won't go into that. I think we all know what I'm talking about. But you have to look at any market at the margin. So who's the last buyer? And the last buyer for silver particularly is the investment market. And that's what determines the end price. So if you have no investment and only industrial demand, you're probably going to see lower prices. If you have a lot of investment demand, you're going to see higher prices. So that's pretty much what moves the silver market. So we have seen a sell-off and discouragement. Plus, as you will probably get into later or not, we saw a real tightness in the retail market in silver. In fact, we saw a tightness in the silver market, which, what's David talking about? Retail silver and silver. Silver price is determined for commercial grade bars. These are 1,000 ounce bars. None of them hardly ever weigh 1,000. They're rough poured bars, usually stamped from the refiner with a serial number and an exact weight. So it might be 1000.301 from Johnson Matthey or something. That's a silver. That's what you're bidding for on the commercial bar exchange known as the COMEX. So that determines the price. But a silver eagle is when that bar goes to the Sunshine Mint. It gets melted down, 3 pennies worth of copper get put into the pot. They melt it down, they cool it, they extrude it into a strip, they stamp it with a cutting machine that cuts it into a silver round. That gets knurled around the edges, and now you got a blank that goes to a mint that mints the silver eagle, which is across the United States. So I'm just trying to differentiate between the cost of manufacture of a silver coin, government stamped or not, privately stamped, government stamped, doesn't make much difference. The premiums might vary, but it's basically 1 ounce of pure silver versus a great big block. So the block costs a lot less than a silver bar or silver coin. Having said all that, it's probably elementary to most of your listeners, but those new people, the retail market, the bar, small bar, and the coin market just got these humongous premiums. I mean, silver was at the $25 level, and people were charging $5 or $6 an ounce over that spot price for a silver eagle. In fact, some dealers, if I recall correctly, and you may remember better than me, Jake, I think one dealer was paying like $3 over spot to buy silver eagles so he could turn around and sell them for, $6 over. In other words, make that $3 spread.
Yeah, I sold a little bit of silver to move a little bit more into silver miners when it was at $29, and he bought it for 2 over, and I knew I could have haggled him for more, but so that happened to me.
Yeah. So the point is that most of that's cooled off now, and then just to reinforce what you said, silver is a lot more emotional market than gold, and it's a lot smaller. And I'd say that many of the investors, not all, are more geared to the price movement, either up or down. So right now it's fallen off, and there's some discouragement in the market. This is all normal. And coming all full circle to make my final statement, all bull markets climb a wall of worry. There's always, that's it. It's not going to go past 2,000. They're worried about it doing that. Oh, it hit 30. I should have sold. And now it's at, it hit 25 and it backed off. And I just looked at David's new update. No, now I'm really worried. Worry. And that's the way these bull markets work. And they also have such sharp declines that'll shake off a lot of new investors and sometimes more seasoned investors. They'll grab on the silver train at 20, ride it up to 30. Then they watch it come all the way back to 22 and they're convinced they made a bad investment. They'll sell for that 10% gain. And then all of a sudden silver's at 35, 6 months later. And they wish they never gotten off. So they get back on. And then it goes from 35 back down to 25 and they go off again. This is what happens in a bull market.
So could you explain a little bit more of that? You said, quote, this is what happens in a bull market. And
well, a bull market, I mean, you can't predict the future exactly, but there's basic ideas that get these adages around them, bull, like, well, what is that? Bullish is that it's long-term going up in price. But that the analogy being a bull is like a bull rider. I mean, to ride a bull, they count it in, seconds and milliseconds for how long it can stay on its back. And that's a good metaphor for a bull market shaking off the investor, because even though that bull is what you want to ride all the way and, come out with the trophy, a lot of people get shaken off its back because it's so volatile. So the volatility is something you got to put up with in all investments, even real estate. But the metals are the top tier of volatility. There's no more. Beta measures volatility, and the beta for gold stocks generally, because all 149 different groups of stocks, is usually the most volatile of everything. So you're in a market, markets are volatile, and within that, all the markets, in the stock market, you've got the most volatile of all, and that's the gold stock market. So you've really got a lot to hold on to. But it's very satisfying if you're able to, I'm going to turn tables on you, Jake, if you don't mind, because you entered my premium service fairly recently and you watched this thing collapse. And, with a little bit of personal dialogue, which I allow with my members, everyone that pays me can have 2 emails a month, and you were getting a little concerned there. So why don't you give us a little guidance? I mean, people trust you. Why don't you tell them, what we did or what
Well, the reason I asked you a lot about that and my, your experience, and I want to go into it more, your experience in prior bull markets and stuff, is because I didn't know what I was getting into, of course. And I started only buying physical silver, some physical gold. And then, I got a decent position. And then that was when the market, I was doing pretty good, but that was when the sell-off happened and everything, fell through. And, and then that was when I called you, and I don't know what it was now. I don't know if I lost 50% in 5 days or if it was 60%, but it was a lot. And I said, one of the things that I learned is definitely only invest the things that you don't need. And having a business allowed me to, it's not like I needed the money tomorrow. And so then what I ended up doing over the next while at the bottom of that with you telling me don't sell anything, is once I understood what you were saying a little bit better, then I went all in specifically on silver miners. And seeing the ride back up to the next level where silver went to 29 was like, holy cow. This is, geez Louise, I'm going to be retired in my early 30s, right? And then, the sell back down again, and then everyone thinks the market's over. And then the last couple days when we had that big run in silver, like 3 days ago, as of us making this, it's November 10th. So I almost own exclusively silver, and I know it's more risky. I'm aware of that, but I know the reward's better, and I have enough money in my business and all that stuff where I'm not worried about it. And the volatility, I hated it at first, and that was what I made a joke to you one time that I was going to need heart medication if I kept working with you. And then now I've started to love it because I see the volatility even on the downside, if you can understand it, is actually inspiring because it's going to do the same thing on the upside. And so it's been interesting to see. I found from all the comments and the channel and everything, it's most people's biggest problem is they can't handle their emotions and the volatility of it. And so I've learned a lot about letting go, definitely, like just trusting whatever inspired me to be in it, call it God or call it objective thought. If you want to be rational as an investor, I call it God, but letting go and not micromanaging it anymore. Yeah. And so that's kind of been my journey. And that was aided really by, I was on the phone with you and I said to you, you said, well, did you put your stops in? And I said, what's a stop? And you said, you don't know what a stop is? And I said, no. And you said, and then I said, well, if you were me, I said, I know you have to tell everybody what to do, but if you were me and you were my age, or if this was you at your age, what would you do? Because I'm just going to do what you would have done when you were young and aggressive. And listening to that is I think will fundamentally change my life over the next couple of years as the portfolio grows.
Yeah, good. Yeah, well, thank you for sharing. It was a tough time for everybody. And, you weren't the only one. We have a fairly good sized membership, not probably what people think is, $500 is a big hurdle for some people. It's nothing for others. But regardless, you weren't the only one. I had several emails from members saying, other newsletter writers are saying, this is it, get out, bail out. What do we do? And I was very consistent across the board, which I always try to do for everybody. I want to be the same person for anyone. And I said, don't. So if you haven't gotten stopped out and it's too late, just hold what you have. And as you said, and I'll just reiterate, it came right back up pretty quickly. In fact, I was surprised. I knew it would come back up. I was surprised how quickly it came back up, which showed me how just strong the bull market really was.
So that's a sign that it's strong when it
When it comes back fast, it's really strong.
Okay.
Right now, it's not. Right now, the bulls and the bears are about even, meaning that we're going sideways. On days up, there's a little bit more buying and selling, and the days down, there's a little bit more selling than there's buying. So it just ebbs and flows back and forth, back and forth. It's like a tug of war, and they're pretty close back and forth, back and forth. Bulls, bears, bulls, bears, bulls, bears. And that's going to keep the price in this range, and that's why we call them trading ranges. I don't think we have a lot to see either direction till the end of the year. It could be wrong. If something's wrong, as you know, as a premium member, I'll make an update. I'll do a video, and you don't even get to see my.
Why do you think that? Do you think it's because there's so much political uncertainty right now that everything's just going to be in limp, especially now that Trump and Biden are, fighting to see who's going to win, and it's going to go into court now and stuff? Are those the reasons that you said that you think it's going to, there might not be action, or what's your feeling?
Well, I've been given an answer that's maybe a little more involved than I used to in the past. I mean, everybody wants to know why, and that's intent. Why is it going? And you just ask that question. All I answer it. You might not like the answer. It's almost immaterial why, because the fundamentals, reasonably objective answer is more sellers or buyers, or even. It's about even. The reason I think it's even is a few. One is the political uncertainty is already built into the price. Secondly, the big run has already happened, so there's people at $29 silver that aren't going to buy anymore. People that were smart enough to buy at that $12 level, such as you and I didn't buy at 12. In fact, I bought at 14. I bought the day before it hit 12, and the day before. So I timed it pretty close, but a day was $2, right? So I called my primary dealer and I said, if I bought today, how much of a difference would that make? And the answer was practically nothing, because the retail market doesn't move like the wholesale market. If I'd gone in the futures market at 12, which I could have, then I'd be very happy because it'd have all that leverage, but I didn't do it. But physically, it wouldn't have cost. I would have saved maybe 50 cents a bar, type of thing. So coming back to the question, why? A lot of the smart money got in around that time. I've been playing that video from the Davos meeting way back earlier in the year when Scott Maynard said, let's go to investment for 2020 with silver. And I think he and a lot of fund managers bought in. We had the biggest move in silver in the ETFs we've seen in many, many years. We've seen more offtake and off to silver off the exchange than we've seen in many, many years. We've seen the investment demand almost equal to the industrial demand this year. Usually the industrial demand is, as I said, 50 or 60% of the market, depending on which silver study you read. And the investment demand is usually around 10% of the total market. This year, it was like 50%. So I think all of the smart money's in and holding. I don't think there's any fresh buying right now. And you've got to look at what you just said, and you kind of alluded to, and I think it's part of the reason why, is people don't have the money to invest. I mean, someone that might have been, going out to eat once a week or once a month and, stacked, a roll of silver every month might not be working now. So they're not going out to eat and they're not stacking silver anymore. And you multiply that times however many were doing that or whatever. So I don't think that, even though I'm not trying to contradict myself. What I'm saying is big money is in right now, safely, early. And now we're just consolidating that. And then it's very typical of, especially commodity markets, is consolidate what they've done. We call it digesting the gains. So we're digesting the gains from that 12 to 29. Now we're digesting them and it's going to level out. It's called 25. And then it usually tests the breakout point, which you could call 22 or so. And not always. And then from there, everyone's like, oh my God, worry, 22, are you kidding me? And then it's only there for a couple of days and it bounces back up. So hard to say, but the long version of the why is you'd have to know why, you'd have to individually ask every person that was selling.
Fair enough.
I got to sell taxes. I got a medical bill. I want to buy a car. I need a down payment on a house. I mean, there's thousands of reasons of why. So you really can't. So I try to look at the why much less introspectively than I used to. I used to want to know, why did it do that? And as I've gotten older, I realize why isn't as important as it did it. Let's look at what it did. Let's look at how much volume there was. Let's look if there's follow through or not. Let's look at it really objectively. Knowing why doesn't change the price. You know, if it went down $2 in 2 days, knowing why doesn't change the fact it went down $2 in 2 days.
Does
I mean, and just sorry to interrupt, and I'm going to get people really mad. So most of the time you get those big moves, it's because of paper selling on the COMEX. Duh, I know that. I mean, I'm called the Silver Guru. I put a big tongue in my cheek for that moniker. I made it up. I live with it. It's fine. So I know, but then you got to say, well, okay, David, it's a massive amount of selling. Why is that? And you could just visit this why and why and why forever. We can do a whole show on it. Normally the why is options expiration. Most of the time that the professionals are taking the money from the backs of the speculators that don't know what they're doing. And they've got bets made on a certain time of the month, and they can move the market around. And so they'll move the market around to certain levels to be able to take all that option money basically from the public. So that's the reason. It's profit motive for most of the time. So what's the real reason? For the big moves, usually profit motive, and usually to the downside. I mean, that's pretty clear over the years. I even wrote about in the book Silver Manifesto, so you can read that if you so wish to. But and I'm sorry if I'm belaboring the point, but the longer term, I don't pay as much attention to the why.
So let's talk about the longer term then. I mean, what do you've been around this industry for a long time. You've seen false breakouts. You've rode the epic ride to 50. And, Eric Sprott himself, who's, arguably the most successful mining investor ever, has said that you're the number 1 or 2 silver analyst in the world, in his opinion. So what's your analysis? Is this when you're looking at everything that's happening right now, the prices, it's held above 20 and, it went down to 21, 22. What's your view? Is this a real bull market? Is someone like me that's put 95% of their portfolio into silver and is now has put seven figures into silver? Am I going to end up being the biggest idiot in the history of the world, or what's going to happen over the next little while? How do you see it?
Well, we have two things to look at. Some look at one or the other. I look at both. So technically, what I already explained, I'll just reiterate. We are in probably the biggest bull market that's ever going to happen. One of the reasons that I can say it with more authority is because what I just said a few minutes ago, that there's been more silver investment this year than there's been in the past 20 years. We've never had in the last 2 decades, 50% of the demand of silver come from investment demand. It happened this year. So that's number 1. Number 2 is fundamentals. We've never seen as many people awake to the fact that paper money goes to its intrinsic value of 0, as Voltaire says. So we're looking at this combination, the overused word, synergistic effect of fundamentally the dollar's being destroyed along with all the other currencies of the world. So we're having a currency crisis on a global basis. On top of that, we are in a food crisis that's manifesting more and more. We're also having a jobs crisis, and we're talking about universal basic income. Most people that are even at the cursory edge of understanding the financial monetary system, at least whiffing the air, knowing that there's something to do with this blockchain cryptocurrency thing, and I'm not sure what it is, but that's all I hear about. So they know there's a massive change coming the way we make settlement payments. They also, if you're sophisticated at all, and some people are and some aren't, it just depends where you are, what you do. But the point being that, you can settle very quickly with the blockchain, whereas with the SWIFT system, you may as well take your money in an airplane and dump it off at over the counter, because I do wires, I hate to say all the time because I don't, but I do several a year, and it's just a pain almost every other time. About half of them go through successfully. The other half, you got to chase them down, find out where they went or why they're not there, or who's holding the money overnight or whatever. So with the blockchain, you can get a lot quicker, more efficient transaction. So there's all these things coming together to point to where is safety? What do I trust? And the ultimate trust for thousands of years have been the precious metals. So there'll be a spillover into the precious metals. And that's what happened in the 1970s. It took silver from 5 to 50, but that was a USA phenomena. This time it's a global phenomena. You have the internet, you have better communications, you have the ability to buy with the click of a computer, and you've got social media to help tell the story. So it's going to be much greater demand, but you also have a competing currency. You have the cryptocurrencies, which will be an adjunct to a way to preserve wealth outside of the precious metals. And then you have kind of the hybrid, which I'm associated with Load, and I did have an investment in there, and I've upped it. It's not significant, but it's enough to where I watch it. And that's a crypto that's based on precious metals. So you have the adaptability of being able to pay anywhere in the world instantly in metal and settle in metal electronically. Yes, it's a derivative in a way, but you also have the ability, if I paid you 100 ounces of silver for whatever, your bookcase and all the books behind you, I don't know, and we agreed, you could take the transaction electronically and then you could cash out in real silver. So, you know, there's real silver behind it. It's just not, we're not physically moving. I'm not going to mail it to you. The, I guess you'll call it the company is, the Load project people will. So anyway, a lot going on, and I've said a lot, but this is where we're headed. We're heading to a new monetary system, probably based, the bankers want a cashless system, modern money theory, no limit, under their total control, where you can only use their central bank digital currency. That's what they want. They're also very aware of Ether and Bitcoin and Litecoin and Ethereum and Ripple and everything else that's out there. They are not going to trash those, in my view, but they will make them periphery settlement availabilities, meaning that I could do transactions with you in Bitcoin and we'd both be happy, but I can't get a mortgage in Bitcoin or a utility bill or settle my cell phone bill or buy an auto loan or a student loan. It'd have to be in the central bank digital currency. That I'm 99% sure of. They are going to maintain control. They're not going to give up their monopoly. So when the system switches, if this one ends, the paper money system ends and it goes to a central bank digital currency, it's going to be mandated that anything that we do in big ticket items, like we already do, will have to be under their purview in their currency. You can't use Bitcoin. I mean, there'll be someone maybe that'll transact and take a haircut, you know, $1,000 with the Bitcoin. They'll give you $800 in Fed coin for it. And now you can make your, you know, your Fed coin purchase. But that I think is going to happen. I've been writing about that. You're a member. You read my private work. You know what I've been writing for the last 3 or 4 months. I'm very concerned about it. I want competing currencies. I want the people to decide what money is. I want the bankers to leave us alone. But that's a pipe dream. I mean, they're going to maintain as much control as they possibly can. But it's not over either. You know, there's a lot of smart people out there that are sort of freedom oriented, especially when it comes to, you know, humanity and, you know, what are our human rights? Don't we have a right to live our own life and be left alone and settle amongst ourselves and voluntarily do things instead of having to mandate what we must do or must buy or can't buy? So, you know, I get a little emotional on this stuff, Jake. You've known me for a while now, but I really think that there's still an opportunity here for us to break free from our overlords, but it isn't going to be easy. It is going to take a fight.
So well said. So let me ask you. So, I mean, I dabbled, you know, to begin with, and I was only in physical, and then I realized the potential in the miners, and then when everything sold off so hard, I was like, geez Louise, I need to get in there. I mean, in hindsight, my biggest mistake is I should have doubled everything that I bought at that time. But you know, I've made a big enough investment where if I can't retire off the rest of my life on it, I definitely could if I minimize my lifestyle a little bit. And so and it's mostly in silver because I think there's a lot higher potential in that. And one of the things that I And I own everything. I own physical gold, I own physical silver, I own Bitcoin, I own mining stocks, but I own the majority of my portfolios in silver. Can you see a scenario where silver gets smashed down and stays down, or it doesn't move up anymore, or cryptocurrencies cause it where there is no longer any interest buying in gold and silver anymore and that industry's dead?
I'm going to say dead, but no, it concerns me a great deal. First of all, I do expect a spike in silver. So there's several things that can happen, and no one knows the future. Right now, as I said earlier, I'll just reiterate to make a point that the banks want modern money theory. They don't want any backing whatsoever. That may not happen. They may be forced to put gold behind their digital bank, their digital central bank digital currency. So that would put gold at probably a fixed price, or at least a floating unit based on a fixed weight. So you could have the Fed coin is worth 1 gram of gold, okay? And gold floats versus whatever the other currency units are. It just depends. But gold could easily, in my view, go to a part of the new monetary system. And so therefore you'd have like an L shape. You go up, 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 and then it just level off pretty steady. Silver is not going to be a monetary metal out in the system, but it could be, and it actually is with the Load Project, a money outside the system. So that's a tougher call, because if you, in theory, had enough, let's say millennials that said, oh man, I know silver's really a lot better deal than gold. And maybe the David Morgan gray-haired old man isn't such an idiot after all. I want the best of both worlds, man. I want half my net worth in my phone private, and I also want it backed by something real, and silver's outperforming gold, 3-1. If that were to occur in enough people, then we could have a similar kind of not straight up, you know what I'm saying, a big move up and then a leveling off. If we don't get enough people involved in silver as money, then I would expect a spike up and a down and a leveling off somewhere. Is there a point where we would just move onward without the metals whatsoever after 6,000 years? I would say yes, it's possible. What's the probability? I don't know. I'd say it's very low at this point, but that's the trend. The trend has been demonetized silver, 1873, demonetized gold, August 15th, 1971. Don't talk about money to anybody in the public school system whatsoever. Make sure that all they know is it's a digit, and it's on their phone, it's electronic, and we control it, and they're too dumb to understand what's going on. So give us all the power and control about it. You just go for work for a living and stick it in our bank, and we'll treat you nice. So that's sort of what's been going on, and that trend continues. So you could see that happen, or it could be outlawed, which I really doubt. And people, well, David, do you think it's going to be confiscated? No. Do you think it's going to be outlawed? No. Do you think it's going to be taxed heavily? Probably. But even in the tax situation, usually the elites leave themselves a loophole. So what will probably happen is, yes, taxed it. It's already taxed pretty high anyway, but you will be able to borrow against it. So you could pay a tax rate of 28% if you sell your gold, but you could borrow it at 8%. Well, then, okay, fine. Loan it to the bank and take an 8% write-off, while you're enjoying the profit, So there's usually, like I said, if you follow what the rules are for what they have for the planet for themselves, you usually can do okay. And I'm not trying to do anything funny here. I'm just surmising what I've learned over many, many years. So,
right.
I think it's unlikely that silver will stay at a high level, unfortunately. I think it is more likely that gold will. And will they both fall off into the dustbin?
Do you have a sell point for silver, like in your head, that you're like, I will sell at this point?
No, I wrote the whole book with David Smith. David wrote a lot of it. I wrote a lot of it. We combined forces. The Second Chance book, which is, in the member site, the PDF file of it, and you could get the hard copy if you want. We go through a lot of scenarios. It's going to be really tough to call the top this time. I've called every top so far, and I've called them all correctly. I haven't been so good at the bottoms, as you know, but I helped you at your bottom. But anyway, yeah, I think, first of all, you don't want to try to get the top tick. You want to sell into strength. And so you want to be able to get like within 80% of the top. So if the top, for example, is $100 silver, if you sold all of your silver at 80, you might go, gosh darn, another 20%. And that meant, $500,000 or whatever. Get over it, because once it hits 100, it might be down to 70 3 months later. Now, oh man, I'm glad I got out at 80. No one even wants it at 70 right now, and there aren't as many buyers. So you want to sell in strength. We like to sell in tranches on the way up. Try to not get too greedy. One thing that I've learned about silver investors, generally speaking, not all of them, is most of them are too greedy. They're looking for that super high price, and that happened when it called the top at 48. The end of April 2011, early May. I won't name names, but there's some pretty well-known people in this industry that were giving me the business about being wrong on my call. And I wasn't. I was right. Not too many of them came back and said, nice call, Mr. Guru.
Because they thought the price was going to keep going.
Well, it's going to go to 100. You're going to look like a fool. Silver's going to 100, don't you know? You're an idiot. Why are you getting out at 48? You stupid. You're going to regret it for the rest of your life. Stuff like that was coming into my email box. So, does that mean I'll get it right the next time? No, it doesn't. But at least I'll tell you what I'm doing and why I'm doing it. And, I don't expect to get the exact top. I do expect to be able to sell when everybody wants it. But the problem is there's going to be so much emotion around it this time. That's not going to be Rodney Dangerfield with his, cell phone when no one had him, and Caddyshack. Everybody's buying and selling, but he's selling, that.
Are you saying so much emotion because now that there's so much internet and the FOMO is so much stronger that it's going to be a more powerful market? Is that what you mean by that?
I mean that, and specifically, fear. People are going to be so freaking afraid that they can't buy food unless they have silver. I might be exaggerating, but probably not too much at this point in time. I'm not talking about today. I'm talking about 2 or 3 years from now. That there's nothing else that's going to work except the precious metals, that the dollar is doomed to absolute zero, all these kind of thoughts. This isn't what's going to take place, but the thinking of, and it won't be the majority of the 3% of the people that are metals buyers from the 0.5% now, or whatever it is. When it doubles or triples, when it doubles, redoubles, and doubles again, when you go from 0.5% to 6% or something, buying metal because they see what's going on, there's going to be so much emotion that if I say this is the top, I'll be getting those kind of emails I just described, except instead of getting 3 of them, I'll get 300 of them. And there'll be people that'll say, I loved your service. I've been with you 20 years and you're a complete moron.
Yeah, you're a traitor.
You join the Illuminati, or you're a Freemason. I always knew you were. Or you are JP Morgan's great-great-great-grandson. Or, who knows what's going to come my way. But that's okay. I can handle it. And I'm just going to do my best for everybody. Do I want to trade silver for fiat? No, I don't. Will I? Depends under the conditions at the time. But you really want to think ahead. What do you want to do? Some of your age, you might come out, way beyond what you even imagine right now. And maybe it'd be something to think about, a foundation or something to teach monetary history, or, you already have a really good background on what you already teach, and just expand that, or train people and maybe start centers around the country. I don't know. I'm not telling you what to do. What I'm telling the audience is think about what you would do. Because if you're solid, there's enough is enough kind of thing. And then when you have more than enough, well, how can you put that to use for the betterment of not necessarily just your family, but, the population at large? A real philanthropist that really has just motives in mind, where you give the money away, you don't build a foundation to control a think tank so you can have legislation work in your favor so that everything that you do comes back to you tenfold, that kind of nonsense, which is what the way the system is right now in a lot of ways. There's some truth. It's a broad spectrum. Anytime you use a broad brush, like what I just said, well, David, don't you know such and such foundation has been doing good work for, yeah, look, I'm pretty good about giving. You know, I'm pretty good about writing checks to causes that I believe in.
Interesting. So let me ask you, I know that you're not really the guy that says, "Hey, I think silver is going to be at $50 by this date." That's not you. Do you share the thoughts that are in your head about potentials? Yeah, but you don't say it's going to do this by this time.
Well, I
But I
have.
got
I mean, you know, usually I've been ridiculed. I mean, you go back, you check every video I ever made, you'd see that, you know, I called maybe a $30 silver and maybe it hit 20 that year or something. I mean, I've made errors like that, but you know, I take those kind of tongue in cheek, and people that pay me and follow my work know that I'm really, and you do. So you know how I operate. I usually look at about 2 or 3 months, you know, and then I let the market dictate which way it's going to go. So, you know, if somebody calls me up, we do a round table and it's January 2021, they say, "What do you think silver's going to be at the end of the year?" I'll play their game. I'll say, "It's going to be 52.20, you know."
So do you
And
think
then,
that it can cross 30 next year?
oh yeah, no, I think it's possible that we could see 50 next year, because the the real stopping point is in $30 level. When we hit the 50 or $48 level, it was there on a spike, but it consolidated for around 30 for almost a year. Then it bounced off 26 3 times in a row, right away, bang, right back up. Remember we said quick move back up, strong market, right? The fourth time I knew it was going through, so I did an update video, which you're now used to for the members. And I said, "I'm sorry, folks, but silver's going down under 26, and I don't know how low it's going to go." Now, at that time, I never thought it'd hit 12 again, I'll be honest, but I knew it was going well below 26. And I had some hedge fund managers that follow my work that were pretty doggone happy because they hedged at that level. So they were, you know, basically neutral. They didn't lose any money. So anyway, once you get through 26, it's going to stall out, you know, probably in the 30 area for a while. Once you get above that, there's really not much holding it down. So any new buying, and if you have another year like we had this year, I mean, remember what I said fundamentally, the largest amount of silver physical purchase that's happened in like 2 decades or more. If that happens again next year, let's say it was just a warm up, let's say it doubles that, you're going to be in a real crunch for silver, because the mining supply is going to be off fairly measurably this year because of the crisis that we're all facing. So still very bullish, but not so much to say that silver is the only investment you should have. It's probably the biggest ride you'll ever take. You've already experienced it. You've had someone hopefully that guided you in the right direction and tried to just say, you know, put the emotion to the side, don't sell, just ride it out. It's going to come back. Again, it came back a little snappier than I expected, which I was happy for everybody. I think most of my readers for the year are pretty happy. I know that.
So am I the stupidest person in history for having like probably 85% of my money in silver?
No, Mike Maloney's probably got 100%. And no, I don't think so. I mean, most big money is made by a real focused approach. But, you know, there are reasons to diversify, especially as you get older, because if you're in the wrong, you know, if you're overloaded in an A market, and that's the wrong market at that time, you're going to pay a pretty heavy price. But at your age, what you do with the business behind you, you know, small family, no, it's okay with me. I mean, I'm not going to give investment advice. I can't. I'm not a registered investment advisor. But I could tell you from, you know, my experience, people that make big money are usually pretty darn focused.
Yeah, that was kind of my thoughts. So let me ask you here in kind of conclusion. Um, Besides people's inability to kind of control their emotions in metals or in mining, it's the same thing in crypto because it's so volatile, and then people talk themselves out of it.
Yeah.
Besides that, what would you say in a bull market, maybe one other thing, or maybe if there's more that you have, but one other thing that is important for an investor that's watching this video, besides keeping your emotions in check and understanding you're riding a volatile train? It's going to go down a lot, it's going to go up a lot, but we're in a secular bull market. What would be another thing that you notice people mess up a lot with, or looking back on all your years of everything that you've learned, what is something else that
I'm glad
is
you started the interview with pretty much that question. I'm glad you're ending with that. So I'll give credit where credit is due. I mean, I was a newsletter junkie when I was younger than you, and I stayed a newsletter junkie up until probably about your age, around 30, 31, too. I started to kind of just maybe follow a couple of people rather than get everybody that wrote about the gold market. So one that's a stalwart, influenced me probably more than any of the others, and several had influences on me. James Howard Ruff, Harry Brown, but Jim Dines. Jim Dines calls himself the original gold bug. And so, having lived through the first bull market, what I learned was this. And I was in this market, as I just said. So if you had bought gold when he started writing his letter, which I didn't get it early on, I was, young, but not, anyway, gold when I started buying this newsletter was probably in the 200 range. But people that had bought his reports earlier saw gold, at 42, 50, 60, 70. So the point is this. Gold went from the start in the 70s to $200, and then it fell off to roughly $100. And then it took a while to get back up to 200, and from 200 it went to 300, and from 300 it went to 800 in a matter of a few months. What Jim said for all those people that had bought it around 200 and were now sitting at 100, and you know how the mining shares work. So if you bought a mining share when gold was 200, and gold is now 100, you know what that mining share is going to look like. It's going to be worth about 10% of what you bought it for. And what he said was, in a bull market, if you just hold for the whole bull market, that you'll come out just fine. In other words, just hold, buy and hold. So I think that's number one. Now, those are with big companies. You can't buy and hold a bunch of juniors because most of those will go to zero in a pullback like I just described. So you've got to know what to hold. You've got to hold the blue chips, the best of the best. The other part is it's so volatile, it's tempting to trade it because he swings, and you know what I do and you see me do it. So I've taken the approach, since I like to do both, and most people can't, but I can, is have what I call a core position I never sell, and sell around 25% up to that much as a trading range. So if I miss a trade and I say, silver's going down and, all my parameters don't work out for whatever reason, they usually do, but I'm not perfect. I still got a 75% core position that's going to go up with the whole market. So I'm doing both. I'm buying and holding for the long term, but I like to swing trade these in between moves where, we got that run down to 12 and I loaded up the day before. Have I sold any of that off yet? The answer is no. I just found a palladium position I forgot I had. So I'm probably going to sell some of that and move it into silver because I think it's a good swap at this time. So there's things you can do. But the big thing is, don't let go of that bull, ride it all the way up. And then when you get to the top, that's the tough one, because as good as Dines is, and I have a lot of respect for him, I learned a lot from him. But the one thing that I'll have to report, and it's not against anybody, this is for the difficulty of calling tops. Jim Dines said that he was going to make the much vaulted one and only gold and silver cell signal known as Buvalo gas. Now, there's probably not anybody on the planet right now living that can say that besides me and Jim himself. But I was looking for the much vaulted one and only gold and silver cell signal. I mean, the one and only gold and silver cell signal, you bet, man, I'm buying your newsletter because I want to know when to sell. And when it peaked on my birthday, he did not put out a sell signal. I did. I sold not all of it on my birthday, but some. He didn't sell until it went from the 850 level down to 400. So he didn't get his readers out of gold until it had already moved halfway down.
Oh, wow.
The only one that did was Jim Sinclair. So, Mr. Gold deserves the title. Jim Sinclair. In fact, when Jim sold, he said, I'm not coming back to this market. And I don't know if he said for 2 decades or not. I forget. But I know he said a long time. And I could tell a story on Jim. I won't. I'll be kind. And nothing wrong. It just proves that no matter how good these guys are, how smart they are, none of them are perfect. Jim got into some other metals that really didn't do that well. He got in and got out. He's pretty good at saying I'm wrong and moving on. But so that shows you, even with someone as smart as Dines, who'd been the original gold bug, taught me a lot, made a lot of money. But, you know, I'd much rather got out at 800.
That's funny. That's good stuff. Well, I guess exciting stuff all around for everyone listening. Make sure you sign up for David's newsletter. He said 500 earlier, but what he's saying is that's for the year. It's $50 a month. It's a really good price for a lot of good stuff.
Yeah, let's just be real clear. Sorry to interrupt, Jake, but I mean, sign up for the free newsletter. Okay. That way you get all kinds of free education. It doesn't cost you a dime. All it costs is your time. So just go to the website, themorningreport.com, and a little screen that pops up, give me a first name and email, and you'll get everything for free. And then if you want to buy a subscription, that's a whole different story. And that's where we go into the mining companies and the global economy and, you know, when to buy, when to sell and everything else. But there's a free side and there's a paid side. So to make
awesome. Well, I guess exciting times. You know, you mentioned Jim. You said he got out for a while, so I guess good to know he's back in the game and seems to think that we're headed for some interesting times. And that sounds like a lot of the most prominent investors like yourself and Jim are all ready for a next leg up. So everyone listening, make sure you hit the like button on either side. Leave a comment down below for David. When I have David back on again in the future, I'll come back to this video and source the questions for a future. So leave a comment down below. Let us know what you think of it.